Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is industrial real estate expert and senior broker of the Warehouse Hotline, Aviva Sonenreich. Now, Aviva entered the real estate world immediately after graduating from the University of Colorado. She's the senior broker and heads up the office and industrial division there at the Warehouse Hotline. Her area of expertise ranges from acquisition of industrial income property to the leasing of offices and office space in the Denver metro area. So guys, let's welcome Aviva to the show. How you doing today?
Great, Kevin. How are you?
I'm doing awesome. Excited to have you here. Excited to talk about everything and anything related to industrial investments in one of the hottest markets in the country, Denver, Colorado. But before we go down that rabbit hole, maybe let's back up a little bit. I'm going to pass it back to you, Aviva. And if you would, maybe tell our listeners a little bit more about yourself, your background, and ultimately how you stumbled your way into this niche of real estate.
Sure. Well, I'll have to preface this by saying I grew up in warehouses. Warehousing has been my family business for the last 3 generations. So I am just very, very lucky to just be able to learn from the greats who are my family members, and I'm biased. But my grandparents fled Nazi Germany in 1950, came to America, worked like maniacs, and saved up until they bought their first duplex, rented out the other side, and that started the real estate investment firm that would later become the Warehouse Hotline. My grandfather found his niche in motels. And what he found with these motels was that they were really, there was a lot of work to be done. Specifically, residential real estate in general is 24/7. You're getting calls in the middle of the night. And later into his career, he realized a more hands-off sector was industrial. Industrial spaces are used during business hours. Triple net leases protect landlords from even getting a lot of the calls. But Dad leaned into that in the 80s and 90s, and then really started acquiring more warehouses in the late 90s, buying what we call the butt end of real estate for $20 a foot. There was no competition. It wasn't glamorous, and it was a different time. We bought the rest of the portfolio between 99 and we'll say 2015, with partners, some by ourselves, etc. And in 2008, when the economy collapsed, we had about, I would say, about 100 units, 12 vacancies for over a year, which was horrific. And then 2 years later, in 2010, when cannabis was legalized in Colorado recreationally as the first state in America with recreational weed, immediately 25% of the warehouse space was absorbed by cannabis users. And then shortly thereafter, e-commerce started to creep into our lives. And since, we haven't had a day of vacancy for over a decade. And also, since we say that warehouses have become the belle of the ball. So properties that used to sit on the market that we could negotiate or that nobody even wanted are now, right, it's on the market and there's 5 offers by 9 a.m. Yeah. So a lot has changed since 10 years ago, but luckily it's been in the favor of people who noticed there was something to warehousing before the mania.
Yeah, no, you and I were joking about it before we started this interview, and we both are in different asset classes. You being industrial, the not so sexy sector, but I would say that mobile home parks also kind of fit that category, and neither one are still sexy. They just provide sexy returns, right? Sexy risk-adjusted returns is the best way to put it. So, both sectors, institutional investors and and private equity groups would snub their nose at the B and C class industrial, and then specifically at the B and C class manufactured housing. And the world has changed drastically in 10 years. And so, but more specifically on your side, speaking to industrial, so rolling out of the Great Recession of 2008. Out of your portfolio of industrial properties, I think you said you had about a dozen vacancies, and they remained vacant for a couple of years until essentially 2010, January 1st, 2010, which is when recreational weed became legal in Colorado. And I would say that lit the flame. Correct me if I'm wrong. That lit the flame of the economic recovery for the state of Colorado. But more specifically, let's talk about industrial, like what that did for the industrial spaces in the entire state of Colorado. But again, more specific, we're talking Denver here now. So tell me about that. I mean, what did that actually look like? I mean, what was the actual, do you know what the actual the vacancy rate was in Metro Denver for industrial prior to 2010? And then how quickly did it all get absorbed? Any idea?
It's hard to say. I don't know exact numbers. But here's something that's really interesting that's happened since then. A majority of the warehouses in Denver, and this is probably similar elsewhere, were built in the 40s, 50s, 60s, 70s. 80s, it kind of stopped. There were a few built thereafter, but for the most part, these small C-class industrial properties were built in the mid-1900s. Mm-hmm. Now, what's being built are what I call, they're mega warehouses. These are 100,000 square feet for this type of property is small, right? Million square foot warehouses. 5 years ago, you didn't see a million square foot warehouse. Now, that's all they're building. So what happened was they stopped building these small warehouses and started building huge warehouses. At the same time, cannabis becomes legal and e-commerce is coming. And as a result, supply and demand, although I don't have numbers off the top of my head to substantiate it, just completely flipped on its head. And suddenly you had big money going into spaces for cannabis. And I'll be frank with you, a lot of them went belly up. I have been in so many deserted or abandoned cannabis warehouses, you would not believe it. And so it was very interesting because the second it got legalized, it changed everything. And all the warehouse space was taken up. And then shortly thereafter, it starts peeling back. But still at that point, the demand was growing and the economy was recovering. So it's hard to say without numbers, but literally everything changed.
So in Denver metro area, when we're talking about these smaller, B and C class industrial properties today, again, we're recording this on April 5th. And so what is the, if it's got a good underlying tenant and lease in place, what type of cap rate are these trading at? Again, we've got some weirdness going on right now with interest rate volatility, and that's going to continue on for the remainder of the year. But there's also a ton of liquidity out in the marketplace that's trying to find a safe home. And one would say that a stable industrial tenant and a triple net lease is a fairly stable and safe place to put your capital. And so, what type of cap rates are we looking at here today?
Well, high 4 is the new 5, which is insane. So yeah, we're starting to see high 4s. 5 and 6 is good, which is crazy. 7 and 8 is probably 7 or 8. Is obviously stellar. Maybe scratch my head. Why is it 7 or 8?
Yeah, I mean, there's really anything in the industrial world trade at a 7 or 8 in Denver, or has it in the past couple of years?
The marijuana deals. Those are the pod deals. You can still, I'll see like a 9 cap, and I don't even have to look at what's going on to know that it's a grow, like a single tenant grow, because you can't get financing on it.
Gotcha.
As traditionally. So I would say, 4, 5, 6 caps, and then 7, 8 is when it starts getting into some funny money.
And the grow operations, are they typically paying higher than usual rents, given their their type of operations, and that ultimately that creates a inflated value of that property or of that
100%.
lease? Okay.
100%.
Okay. So it's not, yeah, I mean, it's a very, very, very risky, not just for reasons of maybe the stability of the business, but just generally speaking. I mean, you're putting a lot of weight on that lease that is already inflated from that of what a other user might be paying for that same space. Is that an accurate statement?
100%. I'll have
Okay.
people send me properties. It's a 10 cap, and it's like it's not a 10 cap when this tenant vacates.
Yeah.
And
Why are they required to pay higher rates? Just because of their grow operation. What's in the reasoning behind that?
so, first and foremost, there's a specific zoning that can have cannabis users. We call it the green zone. So not all warehouses are cleared for this type of zoning. Okay, so already the pool is smaller. A lot of landlords don't want to deal with it. There's a lot of drama that comes into place with these, with any form of an MMJ tenant. And so I'd say maybe 60% of landlords want nothing to do with it. The pool's even smaller. And so what we used to call the green rush, right? Right when it got legalized, if you had a warehouse in the green zone, you could charge whatever you wanted, the green rush. That is coming down, but it's still not to market rate just because there's very little inventory for those users.
Got it. Got it. And your family's holdings, it sounds like you've got a fairly significant portfolio of industrial assets. Are you typically buy and hold, or have you guys actually, have you taken advantage of this peak market that we find ourselves in, and have you liquidated any of the assets?
Our motto is buy, hold, never sell, party on the profits.
Love it.
However, yes, we are selling some land right now that we acquired, very ironically, to industrial developers. So, and hopefully, those will go to A-class industrial developers, and hopefully we can move it back into some C-class warehousing.
Got it. Are there any changes that you guys are making with your own personal holdings? Given the volatility with the debt markets, again, you've owned these properties for a long time. I don't know if you have debt on them. Maybe you do. Have you been recapitalizing anything? You're locking in low rates. Is that just not a concern to you at all at this point in time?
So for the most part, a majority of our properties have no leverage just because we either raised capital with partners or there's a few ways you can get away without having a loan, which we find is clearly the safest because then you're ironclad if the shit hits the fan. But definitely refinancing on those ones that we did have loans on. There is definitely a time and a place for leverage, and sometimes it can help your cap. And we absolutely took advantage of that in the recent market for, to minimize the payment, obviously.
Yeah, sure. Now, there's a lot of asset classes that fall underneath the industrial umbrella, and do you find one's the hottest out of all of them? Like, where's all the capital rushing to? If you had to put the one at the top of the stack, which subsector of industrial is most of the capital running after and fighting for?
Multi-tenant, C-class. The higher the ceiling and the more parking, the better.
Okay.
Really just like multi-tenant C-class, in my opinion. But multi-tenant anything, really.
What are your thoughts on again, I just had an interview earlier today talking about this, but just a couple of days ago was the first time I actually ever heard the iOS acronym. Do you know what that stands for? iOS. I was not aware, and suppose it's a fairly new one. It's not a new sector, but it's a sector that never really had its own name, but now it has its own name and acronym to go along with it. It's the industrial outdoor storage sector. So, typically a industrial footprint where the building itself or structure itself makes up less than 25% of the total ground coverage, and the remainder is utilized for semi-truck parking, heavy equipment parking, storage container, storage containers, any type of parking associated with industrial uses. Is there opportunity, or have you seen any opportunities in and around the Denver market for that?
If you can get your hands on it, it's a beautiful thing. It's an amazing, just any type of industrial yard is so necessary with exactly what you said, extensive truck parking, any form of truck parking, outdoor materials, storage. It's really hard to find in Denver. There is not a lot of it left.
Well, the cost per acreage is probably a developer would be willing to pay more for that than that of someone that probably wants to use it for storage, I would guess, right? Just based on the value of land.
Yeah. Yes. And Denver, the counties are always, unfortunately, when it comes to outdoor storage, it's not the sexiest things. And the counties want these big, sexy new builds, and outdoor storage has got literally a red dot on its forehead. We're seeing a lot of changes in zoning, not in the favor of outdoor storage, just because it's ugly, but it's completely necessary, specifically in the inner city, because the whole point of the industrial space is to access highways and be as efficient as possible. But yeah, outdoor storage is an incredible subset to industrial.
Yeah. Have you guys spent any time the sale leaseback side of the business? Is that one of your specialties?
No, I can't think of any off the top of my head.
Got it. Yeah. So outside of industrial real estate, where are you putting your capital at the present time? Is there any other asset classes that you like, or whether it be industrial, or it doesn't have to be real estate related? Are there other investments outside of industrial per se where you're putting your capital? If so, what are they?
The only other thing that makes a lot of sense to me is single family housing.
That's challenging in Denver, though. You can't buy something that cash flows. Can you?
Yes. No, you're right. And it's more of an appreciation play. Like where's the appreciation? Where's the demand? Outside of real estate, I am heavily invested in NFTs, and I love them, and have been seeing a lot of, had I put this money in NFTs or I put money in real estate, I would have had very, very different income outcomes. So
sure. Well, that's exciting. Any existing NFT projects that you're involved in?
Yeah. Well, I'm my favorite is Gary Vaynerchuk's VeeFriends. Heavily invested in VeeFriends. Really enjoy the community. Really enjoy being an investor, and it's just kind of paying dividends, which has been unbelievable. We in working in real estate investments, we focus on investments, and something that I have focused on a lot is risk and reward. And I'm younger, I don't have kids, and I have a high risk tolerance right now, and NFTs are extremely risky, and they fit my tolerance. And I've just learned that the riskier you are, the higher the risk, the higher the reward. And there's no right answer, aside from the fact that you should never risk money you can't afford to lose.
Yeah. No. Absolutely correct on that point. So, Aviva, we're going to enter into what I call the lightning round. I don't do this every time, but I'm going to do it today because it's fun. It's a good way to end out the show and wrap up the show. And so I'm going to ask you 6 questions, looking for 6 short answers. Just help us get to better know and understand you as a person. So the first one, biggest fear, what is it?
Spiders.
Okay. One biggest regret.
Biggest regret is probably just not buying more NFTs a year ago.
Most influential business book, or book in general. It doesn't have to be business related, but just most influential book.
I only read business books anyway, so How to win friends and influence people.
That's a classic one. So outside of the daily work grind, what do you do to decompress?
What do I do to decompress? I like to exercise, watch terrible reality TV, and consume content on the internet.
All righty. The one thing that you can't live without.
Caffeinated beverages.
All righty. And then the last one here. What would be plan B if just one day you woke up and decided that you no longer wanted to be in real estate? What would you do?
I would work in marketing.
Okay.
I think marketing is fascinating, and in real estate, I just get to use my marketing, my love of marketing to find us more properties.
Yeah. No, I love it. They go hand in hand, right? They go hand in hand. So, Aviva, it's been a lot of fun having you. Tell our listeners, that want to learn more about you, where can they find you? I know that you're just rocking it on TikTok, but you can feel free to share your TikTok handle and then any other places where listeners can track you down.
Sure. You can follow me on TikTok at Real Estate Source and on Instagram. And you can always email me at aviva@warehousehotline.com or just head over to warehousehotline.com and you can find me there. So thank you.
Awesome. Thanks, Aviva. Thanks for coming on. It's been a lot of fun having you.
Thank you, Kevin. I appreciate your time.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care.